Hello everyone, I'm Marty Pospisil and welcome to the January 2026 market update, and Happy New Year everyone. I hope you had a wonderful holiday season with your family and friends. You're well rested and everybody's ready to get back to work. And I'm here to update you on where our market is and where it might be going today. So thanks for joining me. Great fireworks. Okay, let's jump right into it here. Let's talk about what happened last year. Let's give you a little bit of a summary. And this is kind of interesting. 2025, the total number of listings in Metro Vancouver were 65,335 homes. Now that includes houses, townhomes, half duplexes, condos, everything in the market in Metro Vancouver was 65,000 plus. The 10-year average is about 57,000, so that's about 13% above average. We had more homes in the market this past year than we normally do by 13%. Now, let's talk about the sales. In 2025, the total number of sales were 23,800 units sold. That's the demand and the actual purchases. The 10-year average is 31,625. That's almost a 25% less demand in our market, less sales in our market than we normally have over 10 years on average. So supply is up, demand is down. Of course, that results, economics 100, in prices dropping, and we did have drops this past year. We're going to talk about that in more detail. But here's the interesting point. If you look at the housing price index, which is the adjusted price of housing, over a 10-year average, it's about 850,000 on average over the last 10 years. But the 2025 housing price index was 1,114,000. So we're about, last year, on average, 30% above our 10-year average of home sale prices. So it's not all that bad if we look at where we are today in home pricing. You'll see that a little bit later on in the graphs compared to where we have been over the last 10 years. Prices are excellent. Sure, we had a little peak last spring and we're down from that peak, but if you look over the last 10 years, we're doing very well. So as a seller myself, I have no hesitation in selling my home this spring when that market heats up. So that's really an interesting stat. We'll get into more details on the graphs as we get into them further on in my presentation. So let's get ready for 2026. What happened in December? Typically, December is a pretty quiet month. I've improved my presentation a little bit now. You'll see a few enhancements over the last few months. So if we're looking at detached houses, sales activity year over year, we were down this past December almost 13%. The benchmark price year over year down 5.3%. Now, remember, we're talking about end of December last year compared to end of December this year. And we did have a bit of a price surge in the beginning of the year, and we had some peaking out of prices, making that drop a little bit greater. So don't want to confuse you, but year over year, houses down 5.3%, and last month we had a drop of about 1%. All product dropped between 0.5% and 1% on a monthly basis over the last few months. If we look at attached townhomes and half duplexes, our activity year over year down just over 18%, and prices year over year 5%. From this time last year, we're down about 5% on that attached product, and last month dropped just under 1%. Apartment condos, activity down only 11% year over year, and prices down 5.3% year over year, and last month we had just over a 0.5% drop in apartment condos. Okay, so let's talk about more detailed product in different neighborhoods throughout Metro Vancouver. What I like to look at is the sales ratio, and all the sales ratio is the sales for the month divided by the active listings, or the percentage of homes that sold in that given month. And if that percentage is greater than 21%, we're in a screaming hot seller's market, multiple offers, everyone's going crazy and outbidding each other. That's a seller's market. If we're between 12 and 20% of that inventory selling in a given month, we're in a balanced market. It's not favoring the buyers or the sellers. And if we're less than 11% sales ratio, of less than 11% is selling, we're in a buyer's market. There's downward pressure on pricing. We've had a lot of that happening last year, not a lot of this. Okay, so let's look at what happened last month. Got a great little graphic here for the Metro Vancouver sales ratio. Now that's overall. When we're talking about December, we of course had that slower month, and there was some downward pressure on pricing and also a little bit of lack of activity. And the sales ratio, surprisingly, was smack dab in the middle of a balanced market at 14% for Metro Vancouver. So pretty good, considering it's the last month of the year and the end of a turbulent year. So overall, if we look at last month, total listings were up from the previous year, was about 5,000. We're at about 5,500. Total sales down at 746 last month. Previous year, 890, and of course prices down, year-over-year variance overall for Metro Vancouver 10%. That's the number to remember from overall perspective, all product, all neighborhoods. Overall, we're down about 10%. So you'll see that number repeated. If you look at detached houses, Vancouver West Side, here's the sales ratio for last year. We were entirely in a buyer's market for 2025. Last month, we had an 8% sales ratio. Let's bring in this month that just passed, 10%. So that's really interesting. From the previous month, we've gone from 8% right almost to the top end of a buyer's market at 10% for detached houses West Side. Still in a buyer's market, but you can see how that activity jumped up. We normally don't get that in December. I think it's a telltale sign. Let's look at condos and townhomes West Side. Here's what's happened last year. Much more active on the West Side for strata apartment condos than it was for detached homes. At the upper end of the balanced market, ranging from 13 to 20% throughout the year, up and down activity depending on what kind of political activity was going on in our world. Let's bring up the last month's stats. 17%. So we went from 15 to 17%, still in a balanced market, but you can see the activity jumped up, and you'll see that also in the burbs, which I'll talk about a little bit later. Okay, let's pop into downtown. You can see downtown really ranged from 11 to 15%, the bottom end of that balanced market. And now if we look at the last month, 15%. So we jumped from 13 up to 15% in a balanced market. But again, about a 2% jump in activity in December. Very rare, and I think it's a sign we're seeing that repeated over and over. Let's go to detached houses, Vancouver East Side. Here's what happened last year. We were predominantly in that lower end of a balanced market, dipped into a buyer's market at the end of the year. Let's bring up the stats for December. We were at 9%. Surprise, surprise, we're at 12%. A 3% increase in activity on detached houses, Vancouver East Side, still balanced, but an increase in activity. So that's a really good sign. Let's go to attached on the east side. That was our most active market last year. You can see it went from 28% down to 16%, but we ended up last year at 20%. That slowed down a little bit this last month. If we look at the stats, we're actually at 18% now. So attached product on the east side did cool off a little bit from a very busy market last year, still in that balanced market territory. So that's really interesting. If we look at across BC and we look at that seller's market, balanced market, buyer's market bands, you can see across BC, we're smack dab in the middle of that balanced market for all product throughout our province. And if we look at west side, we look at townhomes are orange, condos are black, and detached are green. You can see all of them in the west side were climbing towards the end of last year. Same as on the east side, all climbing towards that seller's market band. So again, there's a lot of signs here about that market heating up. So what is going to happen with prices this year? That's the big question that I get asked. Here's our average price graph since the beginning of when we measured average prices here in Greater Vancouver Real Estate Board, 1977. Boy, they're almost zero back then. That's really interesting. Look at where we are now. Holy cow. So again, people talk about, oh, I want to maximize the sale price of my home. Of course, I do. Everyone does. But look at where we are on houses, townhomes, and condos. Not a lot of change from that recent peak. About 10% from the last spike. But overall, if we look at that 10-year average, we're 30% up in the Vancouver Housing Price Index. So that's really interesting. If we look at the Housing Price Index graph, detached west side, you can see not a lot of change from that last peak, just a marginal drop, and that's the same for the east side. We had a little bit of a drop in activity back there in 2022, back up again, and then a slight drop now in all product. Okay, that's what happened last year. If we look at the 5-year trend for townhomes, houses, and condos, again, here's our peaks back in June of 2022, and then of course our last peak in the summer of 2024. We had a little bit of activity this past spring as well. Overall, about 10% down from our peaks. So that number keeps coming up again. Let's look at the burbs. This is really interesting, talking about the monthly variances of the sales ratio in all of the suburbs last month. Did it increase? Green. Did it decrease? Red. Did it stay the same? Yellow. Now, look at all of the green circles throughout the Lower Mainland. That means all of these neighborhoods, West Side, East Side, Burnaby, Port Moody, Coquitlam, Port Coquitlam, Pitt Meadows, Langley, Cloverdale, Abbotsford, Tsawwassen, Richmond, all had an increase for detached houses sales ratio. So the activity jumped in December for all of those areas. Holy cow, we normally don't get that. Another sign. If we go to attached monthly variances, same story. The activity in all of the burbs, including the downtown area of Vancouver, I call it Vancouver West Side, East Side, but many people not from Vancouver or outside of Vancouver call it downtown, has had an increase in activity over the last month. And that's fascinating because, again, I say it again, it's very rare for that activity to increase in December. You can see that pent-up demand is just pushing at the gates. We're waiting for a sign from above that it's time to list our homes and it's time to buy our next home. And everybody's chomping at the bit, and you can see that already starting to break loose here. So that's really interesting. Average MLS residential price, a lot of movement back and forth. Post-COVID, of course, we had that last peak to today, about 10%. That number comes up over and over and over again. Okay, so what are we going to expect now for spring of 2026 brand new year, a lot of excitement. People are excited about getting into the new year and getting that 2025 over with. Some great optimism, and I think it's warranted. Now let's look at the factors that I look at, the drivers today. Market price enhancers are in green. Market price deterrents, we don't have any right now, are in red. And if it's transitioning from red to green, I put them in orange. So the very first one is transitioning and improving significantly is consumer confidence and buyer demand. So there's two things that have improved. Number one, the Bank of Canada has said very clearly, we're done lowering the rates. We're not going to increase the rates. We're going to have a consistent rate hold for 2026. And you'll see that in the forecasted rates graph that's coming up. But those rates are going to remain stable. That's actually a very good thing. Consumers like that because it's predictable, it's certainty. And also, we have an easing of the trade tensions that affected us earlier last year and caused that slump in activity, which I'll show you. And both of those are improving consumer confidence significantly, coupled with that pent-up demand, I think is going to push our market into recovery mode. So we'll talk about that a little bit later. Inflation in the economy, well, they're both stable. Inflation's stable. Gas prices are bringing it down. I'll show you a graph on that. And the economy is growing marginally, but not dropping as many expected this past year. Cost of borrowing, that's the big one I was just talking about. The rates will remain stable and they're well below historical levels. So nothing wrong with a 4% 5-year rate. Get those 2% rates out of your head. We're not going to see those likely again. So 4%, hey, now we know what we're dealing with. Now I know how much money is going to cost me when I'm buying my home. I'm comfortable now in making a move because things have stopped changing. That's a bonus. And of course, inventory levels, that's really important because if everybody lists at once, that's not a good thing because the demand gets sucked up and prices start to fall. The inventory levels are low and they're remaining stable. We're not getting mass listings coming online. It should be a slow trend this year. So here are all the buyers. The best graphic I could find. It kind of reminds me of a Walking Dead episode where they're all kind of coming out to the home. I don't know why, but they are holding keys and money, and I'm not sure what the magnifying glass is for. But anyways, consumers are coming out, and you can see that for many reasons. One, the unemployment rate in Canada has dropped. We're at 6.5%, and BC has dropped. We're at 6.4%. So contrary to what everybody thought, oh my God, unemployment's going to hit the ceiling because of all these trade wars going on and discussion, we're worried, didn't happen. So we're doing well. Consumers like that. Retail sales, of course, we had a lot of spending in 2025, a little bit of a drop, but still fairly strong. The Canadian monthly GDP, overall, the Canadian GDP is at 0.7%, so marginal increase. But BC over the first 11 months of 2025 is tracking at 1.6%. So the GDP for BC is doing actually quite well. So from an economic point of view, even a Canadian point of view, the economy does not seem to be suffering after all that mess that happened last year. Really good thing. Rental rates I like to look at, we're at about $3 a square foot on average. This past fall we had a slight drop in rental rates, nothing significant. Commercial leading indicator, we did have a drop from 2022, but you can see a nice recovery coming back here up to 2025. So commercial real estate coming back quite strong. Inflation, as I mentioned, there's our friend Tiff Macklem with the Bank of Canada, is at 2.2%, a very good number, down from the 2.4%, and the overnight target rate is at 2.25%, which is excellent. It's exactly where we want it to be, and the Bank of Canada is likely to hold the overnight rate through most of 2026, as I mentioned to you earlier. And this, even though that might sound a little disappointing and you're thinking, oh, I wish it had dropped down a little more, it's actually not, because it can have a very positive effect on consumers because it provides certainty of the long-term stable rates. All people wanted was certainty. We're getting that now, at least with our mortgage rates. We're getting that now a little bit more as that trade discussion eases off and tends to dissipate. So those things are helping us. So the rates are likely going to hold, and I'll show you a graph on that shortly. And if we look at the Canadian or the Consumer Price Index, you can see we're at 2.2%. There's the Bank of Canada happiness band between 2 and 3%. We're at the bottom end of that. And that's primarily due to the lower year-over-year gasoline prices. Big drop in gasoline prices have kept inflation and the Consumer Price Index in turn down and reasonable. So that's all good things. We're in sync with our neighbors. They are at inflation of 2.7%. They were at 3%, so that's dropped. We're at 2.25% for the overnight rate. They're at 3.64%, so pretty consistent, a little bit higher numbers than us, but consistently synced up. So here is the fixed rate forecast for 2026. The dotted line is the last quarter of 2025. Here in blue is our 5-year fixed rate, and here in orange is the variable rate forecast. No change this year, and as I mentioned, it's actually a good thing. It's certainty, and the consumers like that. Here's what happened with the Bank of Canada overnight rate. When we were just getting into COVID, it dropped right down to almost zero, and that held for a while, and then it went way up. Remember that hyperinflation year we had? It went way up to 5% when inflation was at 8%, and people's mortgages were at 6.5%. It was crazy times, and then it came all the way down to where we are today. So this is an anomaly. Don't expect that to happen again. We're actually doing quite well at 2.25% for that Bank of Canada rate. So the buying power, if we look at today's rates, doing a quick calculation for $100,000 borrowed, it's going to cost you $533 when you're calculating what that monthly mortgage cost is going to be for the home that you're going to buy. $5,000 roughly for a $1 million mortgage, to give you $5,333 to be exact, to give you an idea what those financing costs are going to be when you're buying your next home. Okay, so that's good to look at. Inventory, I've mentioned, is low and stable. So this is interesting. Let's look at West Side houses. Inventory line is in red. Here's what's happened toward the end of the year, and that is quite typical. We went in November from 704 homes in the West Side listed all the way down to under 500. If we look at West Side condos, same trend. We went from 960 condos in the market on the West Side down to 634. A lot of homes come off the market, and then they'll come back on this month or next month or March. So, East Side houses, same trend, from 568 down to 416, and East Side condos from 600 down to 431 condos on the market last month. So that's good news. Those inventories have settled down. If we look at active listings across BC, you can see a slight drop over the last few months for active listings. Again, that's a positive thing for the market because you don't want to flood the market with inventory because the prices are directly impacted by that. It's a cold, rainy morning in Vancouver, so I'm really enjoying my coffee as part of my presentation. Excuse the interruptions. Now, let's talk about prices. So here's one of my biggest arguments I've made over the last couple of months on what's going to happen. If we look at our pent-up demand, here's the annual sales cycle for Greater Vancouver, all products sold on a monthly basis. There's a whole jumble of years here. But if we look at a good year, here's a good year that we had in 2021, the year after COVID hit. We had a very typical active year. In January, it started to build up. February, March, we had peak activity. It drops down typically over summer, and then we get another bump in fall. This is our spring market. This is our fall market. That would be a typical good, strong year. Here's, here's the year we just had in 2025, this pink line. It really didn't do much. It went in January. The political instability came up. Sure, we had a little bit more activity in April, May, and June, and then it dropped right down in summer. A little bit of a blip in October, and then it dropped down November and December overall for Greater Vancouver. Now, if we look at the pent-up demand, here's a cool enhancement that I've made. I'm comparing this year to a good year, what would normally sell, and if you look at it and bring that up, here's what it would look like. That's the demand or the volume of sales that we didn't have this past year. Now that's a lot of purchases, that's a lot of transactions that just didn't happen. And that's the pent-up demand. Those are people that wanted to buy and sell last year, but didn't. Those people are still wanting to buy and sell on top of the people wanting to buy and sell this year. So when that market picks up, get ready, it's going to get very busy. So if we look at MLS residential sales for all of BC, you can see that drop that happened this past year. Here's the great year in 2021 we had that I was just comparing with, and then the drop we had in the beginning of the year, and then that recovery through fall. So this again ties into where we are today. Let me blow up that last time sequence from January 2024 to today. You can see in the end of the year, we were quite strong in 2024, and then the political trade wars started happening, and everybody was losing confidence. Oh my God, unemployment's going to hit the roof, inflation's going to go up, we're all going to lose our jobs, what do? Then it kind of stabilized. We realized all that hot air kind of blown off. It eased off, and things started to improve, and confidence started to come back as we came out of summer into fall. I call that the Trump slump, because there's one reason and one reason only why we had that slump last year, and now we're coming out of that, which is good news. So if we were to forecast across BC, our 2025 activity to 2026 activity, we're anticipating about a 14% increase in sales activity this year. That's good news. And if we go into the reasons for that, as I mentioned, it's all about certainty, and certainty is a wonderful thing for the housing market. Why is that? We've been facing a market full of volatility and shifting expectations throughout 2025. Now, with trade tensions easing and the Bank of Canada giving us a long-term rate stability and predictability, uncertainty is turning into certainty. People are now more confident with what's going to happen this year. They are confident in what they're going to pay for their mortgage and not worried about the rates taking off again. And their investment holding and actually appreciating as it normally would. So all of these things bring back certainty into our market and will bring buyers and sellers back into the market. And that year of hesitation is behind us, and I think this is going to be one of our biggest drivers in our market. So if we look at what I follow and controls the market, the mortgage rates, inventory, and consumer demand or consumer confidence, whatever you want to call it, the Bank of Canada is now going to hold the rates for 2026 for all intents and purposes. That's a green check mark. Inventory levels remain stable and low and will build slowly through 2026. That's good. Consumer demand is increasing and will grow through 2026. So all green check marks for this year. A sharp increase in sales volume this fall brings us out of the Trump slump, so that is good. The pent-up demand is at an all-time high, and the predictability of extended rate holds removes uncertainty and will spur buyers and seller into action. The negative impact of the trade tensions are easing, and that will also build consumer confidence. So 2026 may well be the year of recovery that we've all been waiting for. I believe that prices can increase this year anywhere from 5 to 10%, maybe more, not likely less, but that's where I see prices going. That's my market update for January 2026. You can watch this video on YouTube, Instagram, or Facebook, or listen to it on YouTube Music, Apple Podcasts, or Spotify. Thank you very much for joining me today.